Good day, investors. In this video, we'll be looking at Webull stock, ticker symbol BULL. This is a company that is quietly becoming profitable. Customer assets are growing, the platform is expanding internationally, and yet the stock is still trading near its 52-week lows. In my opinion, this creates an interesting setup where the fundamentals of the business are improving, but the stock price hasn't caught up yet. In this video, we will take a look at Webull's latest earnings, break down the most important numbers, and see whether the fundamentals justify the current valuation and if Webull stock could be a good addition to your portfolio. But before we get into it, remember to leave a like for the YouTube algorithm and subscribe for more upcoming videos. Thank you very much. So first, let's quickly go over what the company actually does. Webull is a digital brokerage platform, similar to Robinhood, that allows investors to trade stocks, options, ETFs, and cryptocurrencies through its mobile and desktop applications. The company generates revenue from things like payment for order flow, margin lending, securities lending, options trading, and interest on customer cash balances. Over the past few years, Webull has grown rapidly, expanding internationally while continuing to increase customer assets and trading activity on the platform. Now, when looking at their recent earnings, one of the biggest takeaways from this report is that 2025 appears to have been a major turning point for the company. Webull reported strong revenue growth, improving profitability, and expanding margins, which suggests that the platform is starting to scale. And this is important because brokerage platforms tend to have very strong operating leverage once they reach scale. In other words, once the technology platform is built, each additional customer can generate revenue with relatively low additional costs, which can allow profits to grow much faster over time. If we take a closer look at the numbers here, we can see that Webull generated about $571 million in revenue in 2025, which represents strong growth compared to the previous year. At the same time, the company also reported improving profitability, with adjusted operating profits increasing as the business continues to scale. What this tells us is that Webull is starting to benefit from operating leverage, meaning that as revenue grows, the costs of running the platform do not increase at the same rate. Looking at the user growth metrics, Webull now has about 26.8 million registered users globally, with around 5 million funded accounts on the platform. Funded accounts are particularly important because these are the users who actually have money deposited and are actively using the platform. Another very strong metric here is the customer retention rate of about 96.9%, which suggests that once users join the platform, the vast majority of them continue using it. For a brokerage platform, high retention combined with growing accounts can create a very powerful long-term growth opportunity. And when looking at customer assets, we can see that Webull reported about $24.6 billion in customer assets on the platform, which shows that users are continuing to move capital into their accounts. In addition to that, the company reported $3.9 billion in net deposits during the quarter and $8.6 billion in net deposits for the full year, which was actually a record for the company. This is a very positive sign because it shows that Webull is not just attracting new users, but that users are actually bringing more money onto the platform, which can ultimately drive future revenue growth. Now, another important part of Webull's business is trading activity, because this is one of the main ways the company generates revenue. When looking at the numbers, we can see that equity trading volume increased significantly, growing about 87% year over year, while options trading volume also increased by around 38%. Higher trading activity is important because Webull generates revenue from payment for order flow, options trading, and securities lending. So when trading volumes increase, it typically translates into higher revenue for Webull. Now, when looking at Webull's strategy going forward, we can see that the company is focused on expanding its platform and adding new features that could create additional revenue streams over time. One of the initiatives the company is working on is Webull Premium, which is a subscription service that provides users with additional tools, market data, and advanced trading features. Subscription services like this can be very attractive for brokerage platforms because they create recurring revenue, which is typically more stable than trading-based revenue that can fluctuate depending on market activity. Another interesting opportunity mentioned here is the expansion into prediction markets. Prediction markets allow users to trade on the outcomes of real-world events, and this area has been gaining popularity recently. If this market continues to grow, it could potentially become another engagement and revenue driver for the platform. In addition to that, Webull is also developing Vega, which is designed to expand the platform's capabilities and introduce new financial products and services to users. When you combine these initiatives with Webull's ongoing international expansion and product development, the company appears to be positioning itself to evolve from a simple trading app into a broader financial ecosystem for investors globally. Webull also has strong profitability, as the company has now been profitable for the last 5 consecutive quarters. During this period, the company has consistently generated over $20 million in adjusted operating profit each quarter, which suggests that the core platform is already capable of producing profits as it continues to scale. In addition to that, Webull reported about $84 million in adjusted net income for the full year, which is an important milestone for the company as it represents the first full year of profitability since becoming a public company. What this indicates is that Webull's business model is beginning to benefit from operating leverage, meaning that as the company grows revenue and user activity on the platform, a larger portion of that revenue could potentially translate into profits over time. Webull is also becoming more efficient, as we can see that the company's adjusted operating profit margins have remained relatively strong, even while the company continues investing heavily in growth. In fact, when we exclude marketing expenses, Webull's adjusted operating profit margin is around 45%, which suggests that the core brokerage platform itself is already highly profitable. What this indicates is that a large portion of the company's current expenses are actually growth investments, particularly in marketing and customer acquisition, rather than structural costs required to operate the platform, which shows that the underlying business model is already quite profitable and highly scalable. And when looking at analyst price targets from stock analysis, we can see that analysts currently have a consensus rating of strong buy on Webull stock. The average price target is around $15 per share, which would represent roughly 174% upside from the current stock price. The lowest analyst price target is about $12, which is still significantly higher than where the stock is currently trading, while the highest target is around $18, which would represent roughly 228% potential upside from current levels. This suggests that analysts expect the stock to move significantly higher over the next 12 months if the company continues executing on its growth strategy, which could indicate a potential buying opportunity at current prices. Now, Webull stock is currently trading at around $5.48 per share, giving the company a market capitalization of roughly $2.9 billion. Over the last 6 months, the stock has declined significantly, falling by about 58%, and is now trading close to its 52-week lows, which could potentially represent an interesting entry point at the current valuation if the company continues executing on its growth strategy. So when we step back and look at the bigger picture, Webull appears to be a company that is currently going through an important growth and scaling phase. Over the past few years, the company has grown rapidly, reaching more than 26 million registered users, over 5 million funded accounts, and roughly $24 billion in customer assets on the platform. At the same time, Webull generated about $570 million in revenue over the last 12 months, representing roughly 46% year-over-year growth, which suggests the underlying business is still expanding quite rapidly. At the current stock price of around $5.48 per share, Webull has a market capitalization of roughly $2.9 billion. Based on the company's revenue, that implies a price-to-sales ratio of roughly 5 times, which is relatively reasonable for a fast-growing fintech platform. When we compare this to other brokerage companies like Robinhood, many of these platforms trade at higher valuation multiples, especially when growth and user engagement are strong. A useful comparison is Robinhood. When Robinhood was still in the early stages of scaling its platform, the company was valued at tens of billions of dollars, as investors began pricing in the long-term potential of digital brokerage platforms. Now, of course, Webull is not Robinhood, and there are no guarantees that it will follow the same path. But the comparison highlights something important. Brokerage platforms can scale very quickly once they reach critical mass. If Webull continues growing its user base, customer assets, and trading activity, while expanding into international markets and new areas like Webull premium subscriptions, AI tools like Vega, prediction markets, and crypto, the platform could unlock additional revenue streams over time. So overall, with the stock currently trading near its 52-week lows, I think Webull represents an interesting speculative opportunity for investors who believe in the long-term growth potential of the platform going forward. If you found this video helpful, don't forget to leave a like and subscribe to the channel for more upcoming videos. And as always, remember to do your own due diligence before making any investment decisions. Thanks for watching, and happy investing.